You're with us here on the market. Gautam Shah also joining us this morning. So let's get a sense from him on where we stand currently. Gautam, first let's get a sense of, the current weakness. What are some of the crucial levels we're watching out for? The Nifty Bank also this morning, has started off flat, and now we're starting to see a further, weakness set in trade this morning.
Yes, good morning. It doesn't look good. I think the market has been on a weak footing. I think the foundation to what is happening right now was laid 6 months back, because I think many of the bigger picture technical charts that we follow have been negative for a while now. The technical indicators have not been in sync with the price action. But because the Nifty had such a great run on account of a handful of stocks, we never questioned the technical indicators till about the time when the Nifty got to that level of 12,300, 12,400. And now, given the developments of the last 1 week, it does seem that this is not a plain vanilla correction. I think it's a short-term downtrend wherein the markets will continue to make a series of lower tops and lower bottoms. And this can continue for many weeks, maybe even many months. Market participants are used to seeing the indices correct and turn around and go back to making new highs. I don't think this is going to happen right now, because when you look at the momentum on the way down, when you look at the participation and the kind of volumes some of the larger stocks are clocking on bad days, I think those are indications that there is a big shift that is happening. And also, I think the markets are going through collateral damage given what's happening around the world. So I think this is going to get a lot worse before it gets better. The first pointer to work with is the budget day low of around 11,620. So you could see some stopover demand there. But we believe that eventually this market is headed towards that zone of 11,300 to 11,350, and maybe even a level of 11,100. This has been our working view for the last 1 month. And I think all rallies will find a lot of resistance. So the upside is clearly capped to the 11,900 area. And because there are too many sectors participating on the way down, I think Bank Nifty, which was an outperformer in the last couple of days, is only now setting up for a largest decline. And we wouldn't be surprised if the Bank Nifty loses about 10% from these levels.
Gautam, hi there, good morning. Let's also talk about gold, because we have seen that rush to some of the safe haven asset classes such as gold, although now prices have ebbed off, and your report indicated that you've been super bullish on gold as a commodity. Do you think that this is likely to continue? What levels do you see it hitting in the near term?
It is likely to continue. I think we have been bullish on gold for a quarter now. It's already up about 30% from the kind of prices that we started covering it. And it all beautifully has come together, because you had an environment wherein precious metals started to do well, oil started to break down, defensive started to develop charts which hinted at them doing well. So look at what IT and healthcare has done in the last 1.5 months. So it really all boils down well for this particular downtrend that is taking place. But coming back to gold, I think $1,680 is a target that we were working with, and that was tested a couple of days back. But it's not going to end here. I think another $120 upside towards that target of 1,800 is what we see for that particular commodity. And silver is only now making a comeback. It's been in hibernation mode for many years now. And if that level of 18.5, 18.75 gets taken out on international silver prices, you could see a 30% rally on that precious metal as well. So I think this is one pocket which should act as an insurance. And given what's happening around the world right now, and given the fact that the US markets have the potential to lose another 10-15% from here, I don't think precious metals will cool off the current rally.
Okay, fair enough. What about capital goods, autos? We've seen, quite a bearish trend building up there, particularly autos. What's your view? Would you see that worsening, Gautam, at the moment?
Well, I think I would be more bearish on capital goods. The reason being, in the good times, when the Nifty got close to levels of 12,400, you might have noticed that the capital goods stocks did not participate. And now, as the markets are going through a difficult phase, capital goods has clearly been one of the biggest underperformers. And Larsen and Toubro is a great example because it did absolutely nothing in the last 3.5 months. And many of the top capital goods stocks are setting up for a much bigger breakdown that could lead to 10 to 15% downside for the index and for most of the stocks. Autos, well, they had a lovely run. They moved up 30%, from the lows of last August, September. But the manner in which some of them have just come off in the last 10 days, that does not look heartening at all. So I think in this environment, weak is getting weaker, cheap is getting cheaper, and I think this trend is going to carry on for the next many weeks. So we will have to really review in the last week of March, but at least for the next 4 to 6 weeks, capital goods, FMCG, auto, metals, banking are a complete avoid. And I think the only two spaces that we like are IT and healthcare, and to add to that, two other themes that we like and we believe are spaces where one can hide is chemicals and insurance. So these four pockets we feel will outperform, but everything else in the market looks quite bleak.
Okay. Just wanted to get in a sense then as to what your outlook is specifically on the Nifty Bank in terms of important levels that you'd be tracking. You believe that there is more correction in sight, and what's the view on individual private sector as well as PSU banks?
Well, in the banking space, you might have noticed that, for the last year and a half, just one stock, HDFC Bank, acted like a Pied Piper. So when this stock did well, the Bank Nifty did well, and because the Bank Nifty did well, it helped the Nifty. Now, some of these top performing stocks of the last 18 months have gone through a phase of distribution in the last 2.5 months. And I think this could lead to some serious downside. So if that were to happen, I think the Bank Nifty is only now starting a leg down. We are working with an immediate target of about 29,700, which was around the budget day low. And once that gets violated, we wouldn't be surprised if the Bank Nifty goes down to 28,900 and eventually 28,000. So a possible 2,000 point fall on the Bank Nifty is likely. And I think some of the top names in the space, apart from an ICICI Bank which is broken out of a 10-year consolidation, so apart from that name, I think all other stocks look weak. PSU banking is in terrible shape. Most stocks are making 52-week lows, lifetime lows, and there are no signs of bottoming out. So, and I think we have recommended our subscribers to stay away from this space because you really don't know, where this is going to end in terms of its downtrend.
Okay. Thank you for joining us then this morning, Gautam, and taking us through your views on things as they stand currently.